Asia futures mixed as U.S. shares flat, bonds rally, markets wrap. CBOE volatility gauge remains near 17-month low set last week. Economic data denies investors an obvious policy signal, 22V. Welcome to Long Branch News, your daily source for the latest business news and trends from around the world. Whether you're an entrepreneur, investor, or simply interested in the world of business, our channel is the perfect place to stay up to date on the latest developments in the industry. From breaking news to in-depth analysis, our team of experienced reporters and analysts brings you the stories that matter most, delivered in a clear and concise format. So if you're ready to stay ahead of the curve and take your business acumen to the next level, hit that subscribe button and join us on this exciting journey. Stocks in Asia are set for a muted opening after U.S. shares drifted and Treasuries gained in low volumes as investors digested mixed corporate earnings and economic data. Contracts for equity benchmarks in Japan advanced, while those in Australia also climbed, although the country's equity market will be shut Tuesday for a holiday. Hong Kong stock futures dropped. U.S. equity futures also inched lower in early Asian trade after the S&P 500 closed just 0.1% higher and the tech-heavy Nasdaq 100 fell 0.2%. That extended to 7 the number of trading days when the two indexes have both moved less than 1%. The CBOE VIX index of equity volatility remained near the 17-month year low reached last week, which some strategists worry is providing a false sense of calm. The Treasury 10-year yield fell 8 basis points, the biggest one-day decline since March, while the policy-sensitive 2-year yield dropped 9 basis points. The Bloomberg Dollar Index fell. Investors also trimmed bets on U.S. interest rate hikes, according to the futures market. The market pricing now indicates rates will sit below 4.5% by year-end after peaking in June. The small shifts underscore the lack of direction at the start of a busy week for economic data and corporate earnings. U.S. manufacturing data was weaker than economists forecast and uncertainty over the debt ceiling persisted. Later this week, U.S. GDP data is forecast to reveal slower growth, and the so-called core PCE deflator, the Fed's preferred inflation gauge, is expected to show price growth cooled. Economic data continues to deny investors an obvious growth or policy signal, Dennis DeBuscher, a strategist at 22V Research in New York, wrote in a research note. Demand isn't falling fast enough to signal an imminent recession, but there are no indications of a re-acceleration. First Republic Bank fell in post-market trading after earnings exceeded forecasts, but deposits were lower than expected.